Hi, my name is Alex Carlucci with GustonShow.com. This coronavirus has really disrupted the mortgage industry. I'm going to tell you a list of some programs that are disrupted and how they're disrupted and what it might take for them to come back. And I really don't know for sure what that is, but I'll give you my opinion. So first, our non-QM loans. So we advertise on GustonShow.com that we do non-QM. So you could be late on your mortgage 5 times in a year, go down to 500 credit score. That's one part of a non-QM. We also do bank statement programs where you don't have to show tax returns. Instead of tax returns, we average your 12 months bank statement deposits, and we use that as an income. And our income cash flow that allows you to not show any income at all, as long as the rent of the investment property you're buying and you have at least 20% down, would cover the mortgage payment. That's how they underwrite the files, and those programs are done right now. I hear they may come back and show some life again in the near future, but it's not going to be all those programs, and they're going to be modified with high credit scores only, maybe larger down payments. I'm hearing up to 30% down, probably with higher rates. So those programs are suspended right now. We can't even do them. So if you're reading our website and you see those programs, they no longer exist. We're not going to take them down because we hope they come back, so be on the lookout for that. That's the first program that's gone. Now, other programs that we really have a hard time finding are jumbo programs. The jumbo programs are very difficult to find. We don't have any here right now. I hear that there's some out there, but it's kind of like Bigfoot. I mean, people have seen it, but nobody knows where they are. So I don't know where jumbo programs, I know Wells Fargo suspended all jumbos, and they probably are the biggest servicer of jumbo loans in the country. So jumbo loans are hard to come by. And number 3, VA and FHA below 680 has been really damaged, very, very, very damaged. Even above 700 for VA is damaged. They don't want government loans. And let me explain to you what's going on. So why these programs are all disappearing is because there's no appetite for the big hedge funds that finance these, because they're worried that 2008 collapse thing is going to be, that could happen from this coronavirus if we stay shut for 6 months. There's going to be foreclosures, and they don't want any part of that stuff. So we need to get this back to work, and we have to give confidence to these hedge funds. This is not about people not paying their mortgages. This is not about people having bad credit. This is not about anything to do with the consumer and their behavior on their credit. This is purely a fear from the people who buy these mortgages that they don't want to do it until they can figure out the value of all these mortgages, because right now nobody knows what a house is really worth, if people are going to foreclose, who's going back to work, how many people are going to still be unemployed. We have to figure those things out. So we need to get back to work quick. That is what's going on with the programs right now. So let's cross our fingers, we get back to work and get these things back up and running the way they used to run, because those are all great products. We still can do VA and FHA below, all the way down to 500 still. You're going to have to pay points. It's not the best rate, but we can still do it. So we're one of the only investors in the country that can still do below 660 credit score for FHA and VA. Some stop at 680, some don't even want it at all. We can do it. Give me a call, 630-915-7550. Thank you.